Good afternoon. I'm Amy Thompson, tech reporter for Bloomberg News based in London, and I'd like to welcome you to this virtual event, The Future of Data-Driven Digital Commerce. Today, we're going to talk about digital payments and how the shift toward digital transactions is transforming the global economy. COVID-19 sparked rapid changes in the way we work, live, and shop. The subsequent government-imposed lockdowns and store closures, coupled with a consuming public confined to their homes, fueled an instant transition to online shopping. Will these changes forever alter consumer purchasing and payment habits? Will this experience permanently shift the perception of how digital commerce can be executed? We're going to put these questions to our panelists in the hour ahead. I'd like to start by thanking Checkout.com for their support in making today's event possible. I'd also like to draw your attention to a report that Checkout.com has produced focused on discovering the hidden value of payments. You can find a summary of the report within the window called Handouts in the second tab of the Q&A window. Before we begin the program, a few housekeeping notes. Make sure you're using Firefox or Chrome to view the sessions. If you're having trouble with audio or video quality, please refresh your browser. You can restore windows using the buttons at the bottom of your screen, and the size of each window is adjustable. You can also join the conversation via social media, and we would encourage you to follow us on LinkedIn, Twitter, and Facebook using the handle @BloombergLive. This is an interactive event, and we welcome your questions. To submit one, type it into the Q&A box below the slide window and click Submit. Please include your first name and your city when asking a question. We'll also invite you to vote in live polling, which will appear in the polling box. You'll see the question pop up on your screen as we're talking. Please take a moment to register your responses. So let's start by introducing our first panel of speakers. Joining us this afternoon, we have Julie Deane, founder and chief executive officer of the Cambridge Satchel Company.
Hi.
We have Guillaume Pousaz, founder and chief executive officer of Checkout.com.
Hi, Amy. How are you?
And I'm also delighted to introduce Sebastian Siemiatkowski, chief executive officer and co-founder at Klarna.
Hello.
Thanks very much for joining us today. We've got lots to cover, so let's jump right in. I'd like to start with a group question. Given the massive changes we've seen to the retailing landscape in the last 6 months, how is this changing the types of data that merchants want, and how do you see the types of data and analysis payment providers can offer evolving? I guess we'll start with Julie. What sorts of tools would you like to see that you don't have now?
What I'd really like to see is real value. You know, as somebody who ran 5 open shops and now has sort of 5 dark shops, 1 open shop, it would just be so helpful to feel like we were getting every single piece of information we possibly could about the customers who have switched to online. And I think that so something that for the businesses using it, some kind of easy to use portal that approaches a business intelligence resource, you know, that would be fantastic.
Guillaume, how do you see the types of data and analysis evolving, and how have things changed since the COVID pandemic?
So COVID-19 was a huge macro event for like many merchants. Mostly for mature and large merchants, there was an element of understanding a risk-based decision and how to manage either the new customers that you're acquiring at a very quick rate, and fundamentally also just like understanding where your chargebacks are coming from, how you can actually get more value from the data to make better decisions towards the customer experiences that you're building, and more importantly making sure that your customers are good customers as they come through the front door. I think it's very important that you always acquire customers that have good value, and you can get a lot out of your data, mostly understanding the reason codes of chargebacks, the reasons why the transactions are failing.
And Sebastian, do you have anything to add?
Yeah, look, I think I'm not necessarily sure whether anything has changed, but I do think that in general, one of the things that's always set Klarna apart is the fact that we, on every transaction, we see SKU level data. So not only kind of the amount that you bought for, which you see with Visa and MasterCard, but we actually know the items that you bought, right? Is it a t-shirt or a sweater or, whatever? And we've seen over the years that this has become an amazing asset and opportunity to build, useful applications, whether it's for the consumer side or for the merchant side, whether it's about reducing returns, or whether it is about creating better consumer experiences. When people log into the Klarna app, they actually see images of the items they bought rather than just boring merchant name and the amount. And those might be small things, but they make a big difference from a user experience perspective, and also, reduces operational costs because you're not confused about what was it I bought again and so forth. And I think in general, that trend will continue. What I do hope and believe is that we're moving towards a world where the data is really owned by the consumer, and it's less about the ownership of the data and much more about how good are we as companies of utilizing that data to provide value for our customers, whether it's for the consumers in this sense, right? So how are we using that data to give them a better experience, a more personalized experience, a better experience, more a faster experience, save money, whatever it might be. I think that's really the key. And I think historically data to a large degree has been about we're Facebook, so we have X million users and we own that data, and then, we use that for our own purposes. I think that's the way we're hopefully moving away from. So, but I think those are probably more general trends than maybe necessarily connected to COVID.
And on that point, I'm interested in how aware merchants are of the customer data tools that are available to them now. And I think I'd like to put it to the audience and introduce our first polling question. Do you understand what customer data points you're allowed to use or request from your payment provider? A for yes, B for no, C for partially, D for payment providers supply data without me having to request it. Again, you should see that pop up on your screen. And while we wait for the results to come in, Julie, what would your answer be? Do you think it's always clear what's available and what you're allowed to ask for?
No, I really don't. There's a personal thing, but I suppose I come from that generation where it was, I was always told, if you've got to ask how much something is, you can't afford it, so there isn't that kind of readiness to just ask and say, what can I have, and what's available and what is. I think that speaking from the merchant side, it's often really clear when we're approached by another provider, who wants to snag the business away from an existing provider who comes and says what you can have. But that's like the car salesman thing, isn't it? You get the really good service and then you buy into it and you get some ropey man around the back. But I think there's great potential for stepping up that relationship once you've originally signed on.
Guillaume and Sebastian, do you think that payment providers could do a better job of educating merchants, particularly small and medium-sized businesses?
Yeah, absolutely. But I think in general, I think it's a very valid point that Julie brings up, and I do think that payments companies in general, it's not only about this space is just exploding, right? It's growing at so fast, right? And if you think about it, I also think that what's really valuable is thinking not only about that, but also how do you connect data to other tools that merchants are actually daily using, like CRM tools or whatever, because just showing a report in itself is going to have, it's kind of fun and interesting, but there'll be multiple different places where I can Google Analytics, or I can go there, or I can watch this and whatever. It's just the insights itself has limited value. I think what's really starting to become value is if we can suggest actions that merchants can take, suggest to do this or do that activity based on the data or based on that. I think benchmarking is something that most providers still haven't done really well. Comparing the data and showing you as a merchant are trending this way. If you compare to others, this is what you could do with it. So I think data is it's often to some degree oversold to a good point. While it's actually the insight and the actual what are the actions that I can take based on this, and helping merchants provide those action-based insights that actually you can do something with, right? Otherwise, it becomes like a nice dashboard that you can look at, but how do you actually use it?
here, I would like to opine just quickly on one thing is that you can certainly not put all the service providers in the same bucket. If I have 100,000 merchants, it's very difficult to kind of customize data feeds. This is where there's like different types of providers. There's people that do enterprises and focus on enterprises, and ultimately you get dedicated customer success managers. You get people that really understand your business, take the data of the portfolio, benchmark it against yours. I mean, this is what we do here at Checkout.com. I think one of the clear examples that is actually very topical at the moment is we were mentioning data, but with strong customer authentication to ultimately be able to do it properly at the end of the year, you're going to have to collect a lot of data on the merchant side and share this to your service provider. I think being proactive here, payment service providers should be doing. Clearly, I mean, when we look at the reports that we produce, 70% people think that they're of the merchant surveyed, and there's 1,500 of them think that their service provider is not proactively reaching to them. So I think it's a good service provider should be proactively engaging with you on the data topics, and there's a lot of value that can be created out of this, especially in regulatory changing environments.
Let's see. Do we have the results now? Okay, so it looks like there's a good number of people interested in learning more. And moving on, what changes have you seen in online shoppers this year? Looking at the data that we do have, are there new types of people who have come online, and are they behaving differently? Has what they're buying changed?
Who do you want to start?
Good question. Go ahead.
We looked at this for this conference is that on a volume adjusted basis, we saw 60% more new cards on the platform compared to last year. So there's clearly an acceleration of people that are going online for the first time. This is a card that is transacting for the first time on the platform, and we process billions of volumes every month in the UK. So we do have a certain level of maturity in that market. So clearly people are going online. When we cross-reference this to what we saw in the Oxford Economics report, a lot of people are older people, which are over 65, that were actually transacting for the first time online. And this is, I guess, people that were actually forced to go online because they had to buy, first necessity items and ultimately just food and things in general. What we do know also is that people that are usually, over 65 take security very seriously. So going back to my topic from before, I think how you actually position security for first-time buyers, to people who go online for the first time, is going to be critically important. I'm happy for other panelists to.
Yeah, I think we've seen also very similar things around people, an older demographic shopping for the first time and shopping to a higher degree. So I think, again, it's obviously I'm one of those people who generally don't think that people's behaviors change that easily. But I think that if there's anything I learned over the years is that just listening to data or presentations or something generally doesn't change people's behavior, but going through an experience of any sorts does actually change people's behavior, right? And taking all the tragic and tough parts of this pandemic aside for a second and just looking at the rest of us who hasn't not been affected, it's obviously been a very special experience for all these people as well, being in lockdown and being away and so forth. And it's very clear that people have shifted their behaviors and are spending much more online. I mean, we have a couple of things. We basically saw people going through these phases. So first was the stock up phase, where we suddenly saw a massive increase in pet food, home groceries, all that things. Everyone was piling up in preparation for lockdown. We then saw people were sitting at home and they were I got to do something at home. So they started buying Xboxes and PlayStation devices and connecting and playing together. So we had 105% increase in computer gaming and computer gaming devices, Xbox, etc. And then people got into hey, I've been sitting here, I'm not doing anything, I need to start moving. So we saw 105% increase in sneakers, home gym equipment, those kind of things. And then finally, there's been a lot of obviously do-it-yourself, and home has seen over 100% increase when people started saying, well, I'm going to fix this, I'm going to do that because I'm going to be in this house longer. So you've had this kind of shifts in that. But I think that's just part of it. I think in general, obviously one thing that people tend to forget is that online spending has increased dramatically, but overall people spending has actually dropped quite a lot. So what all banks are seeing, including Klarna, is that people have more money on their accounts. And I'm obviously not talking to the unfortunate part of the population who has lost their jobs. But if you take them aside for a second and look at the rest of the population, all of these people have basically saved 1 or 2 months worth of savings because of no travel, much less spending, public transportation, restaurants, etc., etc. So people are actually having more money than ever, and obviously the increase in spending online is far from compensating the overall spending in retail and so forth, right? So it's a very, very strange situation where you have a part of the population in a worse economic situation, potentially losing their jobs. People who run small restaurants, etc., are in a tough situation. At the same time, you have the other population who actually has more money than ever and are spending more online. So it's a very, very odd situation.
Yeah.
Yeah,
And Julie, what are
and
you
we
seeing
saw
on the ground?
a similar thing. That the types of bags we were selling. We've never seen the sort of the skew the way that we saw it reflecting what the government was announcing. So we'd have when we first started going into lockdown, all of a sudden everything skewed towards handbags. The work bags, things stopped. The backpacks dropped back a bit, but then after people, they seem to be going for more optimistic, very cheerful sort of summer colors to try and cheer themselves up a little bit. And then as lockdowns eased gradually, you could see people start to think more about work, and suddenly it was all about work bags, and then going outside, all about backpacks. And so it was very interesting because the normal mix just would skew completely to one bag type, and we've never seen that before.
And Sebastian, at Klarna, you mentioned that there's been some differences in the way people are paying and what they have on their accounts. Have you seen changes in the number of people using the pay later installment programs, or how much people are borrowing?
Well, in general, we're seeing a big increase in the pay in installments solutions, but I think that's again more a general trend that maybe has been accelerated by COVID, where people are really turning away from revolving, from credit cards, and they find using debit cards and then using occasionally installment products like this online as a better way of spending, because revolving is confusing. You're borrowing against all of your groceries or whatever. It's hard to understand the actual cost, both for the consumer. Our kind of installments are actually free. They don't charge consumers any fees. So they're better from a consumer perspective. And it's also much easier to have control because you kind of see what am I paying on a monthly basis and so forth. So that's a general trend. But overall, what's been interesting, again, coming back to over COVID, is actually that people, when, for example, in the US, everyone got this big check. Some of that money was funneled into more online shopping, but a lot of it was also to pay down debt, credit card debt, or other types of debt, for installments debt, or whatever. So people have actually used that to, again, increase their savings and reduce their lending, or their borrowing, sorry. So that's a general, but the pay in four products are being used more in general, much more than ever. So.
And Guillaume, have you noticed any differences in the way people are paying, or the types of the means that people are using to pay?
I mean, fundamentally, the split payment solutions that are like installments have a high demand right now, especially with retailers. Sebastian is obviously well aware. We see this is an increasing trend anyway. Visa, MasterCard themselves are building a product going into that direction. I think that one of the things we see clearly, but this is across all regions, is that payment methods are, there's more payment methods. There's a fragmentation of the market of payment methods. You would see in Poland, BLIK is now, very appealing. It just came out of nowhere. You see it in Asia as well, where you still don't have, really mature markets. What's interesting is that the UK, the US are very mature markets for payment methods. They don't have a lot of change. And then you see other markets where you see a very big, change in the mix of the payment methods. Clearly, I think like the role of payment service provider is just to be agile and to offer the payment methods that the consumer wants. I think 35% consumers are not paying with credit cards today. It goes up to 65% in Germany. So clearly, I think it's just adapting to the merchants, not to the customer needs. And we don't want to kind of predict the future. I would not speculate on this, but I think that clearly we see change, and that change is, open banking, PSD2. There's a lot of opportunity for change, sometimes regulatory driven, sometimes, cash driven. I think it really depends on the region.
Okay. And are people's cards getting declined more often? In the checkout.com report, I noticed there was a lot of emphasis on preventing false declines. What are some of the things that retailers can do?
So there's, like as the report highlights, there's nearly 20 billion in loss to declines every year. This is again 1,500 merchants surveyed. 1/3 is really hard declines. The famous one is the do not honor, which is like, I don't want to be too specific, but it's a decline that issuers have been using for years to tell you that they're not honoring the card. There's a lot of things that can happen behind a do not honor. Could be the issuer technology that is not operative. I think understanding the issuer ecosystem in real time, so being able to say, hey, this dedicated issuer right now is not available, and being able to see the trends across multiple merchants and creating value is an actionable insight. We're mentioning before, what is an actionable insight? That's an actionable insight, to be able to tell to a merchant in real time that issuer is not working. Either, and basically offer the cardholder to try another card in real time instead of trying on, attempting all the time the same card, because if I'm a card holder and I'm not able to buy on a certain store, I'm going to go elsewhere. I think in general, we haven't seen an increase in non-sufficient funds, but I think that the granularity of the reason codes that you have as a merchant drives your strategy, your payment strategy. And clearly we see that all the best, the fastest growing companies, the companies that grow at 40% have always a defined payment strategy and an alignment of the C-level executives. I think Seb from Cloud about how thorough they are. This is a company we know in terms of how they operate, their payment stack. Having full visibility on your reason codes drives a lot of value for your business.
Okay. And I guess sort of another broader question. Do you think that the pandemic has fundamentally changed the way people shop and spend money, or will things largely go back to normal once everybody feels free to go back to the shops and to work regularly again? Julie, what do you think?
I think that we're getting a lot of interest in the things like sustainability, what the brand stands for, because we make leather goods, but it's leather that's a byproduct of the meat industry. So we are actually a very sustainable business, and we have good ethics for on the green side, on absolutely everything. And people seem very, very interested in who they're choosing to buy from. They do want to support, we look around and see how many people are being made unemployed, how many businesses are failing. And so there is this kind of sense of, let's support a local brand, or let's support a British manufacturer. They're interested in where things are made, how things are made, and learning about the brands. And I think that hopefully that's something that will continue, because where you spend your money is a bit of a vote. It's who you want to put your support behind. And so I'd like to think it was a bit of an ethical shift where consumers are that bit more informed.
And what do Guillaume and Sebastian think? The move of older shoppers online.
That's one thing, but I would also like to say something, which I think, especially when you look at a company like what Julie is doing, it's that, a couple of years ago, I remember visiting Levi's, a German website, and it said on the German website, they only accept credit cards issued in Great Britain. And so you can imagine Levi's wasn't selling much on their German website back then. And obviously a retailer like Zalando was selling much more Levi's in Germany. So that has been a massive shift. And if we look at the 200,000 retailers that Klarna work with, the fastest growing ones are the brands like Julie's, the brands who stand for something, who has a clear story, and who are now really leveraging the online channels to sell directly to consumers. And that is the big shift. And I really genuinely believe that that is going to continue being the case, because you don't really need the retailer in its current form. You need a curator. You need influencers or curators that can help guide you and find interesting products for you. And then you need the product and the brands that are interesting to you. And the rest is just infrastructure that's just there to provide you, connect you, and allow you to purchase these items in as smooth and frictionless way as possible. So I think there's a big trend there, and I think that's where we're seeing online going. And if you look at, for example, the Gen X people who are of that generation, I think this has even further strengthened their very strong trust in using the online channel as their main purchase channel. It is, it's become the de facto standard. So I don't see people going back. I think it's rather just an acceleration of this. And I think it's also an acceleration of the strength of brands and people with strong products being able to monetize those directly without the middleman of a retailer or an Amazon or whatever it might be, which I think is a positive thing over time.
Great, thanks a lot. So I'm getting told that we've got some questions from the audience, and we've got about 4 or 5 minutes left. So I'm going to try to get a couple in. Please do keep sending them in. David from Brooklyn asks, some payment providers have become large lenders. Providers have clear pictures into receivables and can lend against them. But should they become, in essence, banks? Do you believe this is appropriate? This sounds like it might be one for Klarna.
Oh, I don't know. Actually, we only operate today versus the consumer as a lender. We don't operate as a lender towards the merchant. I think Guillaume will be able to answer that better. But I do think that you got to remember that classical banking is basically three things: payments, savings, and borrowing. So I think it's quite natural that companies that are coming into payments are, experimenting in the borrowing and savings space as well. I'll pass it over
Guillaume,
to.
do you have any thoughts?
Yeah, I was going to jump on this. I think if the definition of a bank is transformation of capital and ultimately, like I say, taking savings and lending them into the market, this is not something Checkout is aspiring at doing right now. I think there's kind of two schools of thoughts here, and people like Klarna do it very, very well. As far as we're concerned, we see payments as the nexus of financial services. So we believe in what we call connected payments, where it's about moving money in and out of a business. And more than the lending, it's helping people doing payouts, helping people with their treasury, helping people with FX, and fundamentally doing part of what we would call traditionally today transactional banking, which is you move the money into a business and then you help moving it out, and doing that efficiently, doing it in an API first way, which is what we've seen a lot of interest from our merchants. Will that make us a bank? I think it makes us a financial services company, but I think I'll leave the bank to Klarna.
Okay, great. Okay, we've got 2 minutes left. Maybe I'll risk one more lightning round. Dave in New York City asks, how do you organize, make sense of, and monetize the consumer data you capture? And have you found any value in third-party data? Oh, I think we may have lost Guillaume.
No, so you what? It was for me specifically for Checkout. So obviously there is very strict rules with regards to data. We use a lot of the data that we have today for fraud, screening perspective. So I mean, fundamentally, if you see bad behaviors on our ecosystem, you're going to try to prevent them from other points. This is another actionable insight. Clearly, we're not allowed today to use the data from one merchant to give it to another. So fundamentally, no, we're not a Google or Facebook that is going to monetize the data internally and resell it to somebody. We just use it to basically better, tool our internal system. And fundamentally, if we do see value, then try to create it back to the merchants, but by essentially protecting them with better risk tools.
Okay, great. And I think that is all of our time. Thank you so much for joining us all today. Next
Thank you.
up, I want to introduce.
Thank you.
Thank you.
Thanks a lot. Next up, I want to introduce Bloomberg's TV anchor, Caroline Hyde. She's got a great lineup of guests with her, and they're going to dive into how digital payments can unlock innovation. Over to you, Caroline.
Amy, thank you so much. What a great way to segue into us, because Guillaume was just saying about how you can more fruitfully use data of user bases and make more value add, create value really to the user over there. And I want to talk really about how you can foster value creation via the use of payments. We've got a great lineup, and I want to welcome first and foremost Harriet Roes is going to be joining us. She's head of data science at Starling Bank, one of the key challenger banks in the United Kingdom, online only. Wonderful to have you with us, Harriet.
Great, thanks so much. I'm excited for the discussion.
And we've also got with Harriet, David Montague. He's on my side of the Atlantic. He's actually on the West Coast, very early for him. Thank you very much indeed, David. Senior Vice President and GM of e-commerce at Expedia Group. Hi, David.
Hello, Caroline. Great to be here.
And that reminds me, of course, we are tech first, tech forward here. Please do keep on sharing your thoughts, your views when it comes to LinkedIn, Facebook, Twitter. You can use our handle at Bloomberg Live, of course. But first and foremost, I really want to get some of the viewer, the listener's perspective. We're going to ask you a poll question and let you ruminate on it, and then we'll get kicked off with our first questions to David and then Harriet. I want to, first of all, ask you, the audience, will the growth of digital payments due to COVID be permanent? We've seen a seismic shift, a serious growth in the use of digital, first and foremost, as we're depending on e-commerce so much more. But are you thinking that this will remain permanent? A, yes, B, no, or C, some, but not all of the growth will remain. While you think about that and cast your votes, let's ask Harriet and David the first key questions. So first of all, Harriet, from your perspective, has COVID changed your business at all? Have you seen an uptick in users and indeed transactions coming through your platform?
Absolutely. I think COVID was a realization for lots of people about how reliant we needed to be on digital technologies, especially in the financial space. I think that people who before COVID were able to rely on their traditional banking and payments methods suddenly realized that in this crazy time, technology is what's going to keep us going. And it's really been a lifeline for so many people. Starling has seen obvious changes in behavior, very expected changes, such as people not being able to transact in the shops. They've had to do transactions online. Contactless payments have been on the rise. But we've also seen some innovation that we ourselves have brought to the market to try to help customers at this time. Things like allowing people delegated access to their accounts so that carers could shop on their behalf if they were shielding, for example. And technology is really what made that possible in the time frame that we had, getting customers the products that they need to be able to survive at this crazy time.
Exactly. So interesting that you're able to provide some of those silver linings almost amid what is the great cloud that continues to be this global pandemic. And let's keep the conversation global, because David, you're sat out there on the West Coast, and I know Expedia has had to do a lot in terms of ensuring that people are able to cancel trips, be able to be refunded. How have you seen the business, how COVID has impacted Expedia in particular?
Yeah, no, it's in a word, it's adaptability, and it's really been there's just an unprecedented amount of refunds and cancellations that came in as the event basically unfolded, and a lot of payments that we had to basically reverse throughout the stream. At one point I remember call volumes basically were at 5x their normal volumes, which is just crazy, unprecedented. So we had to innovate. We had to develop basically self-service virtual agent capabilities to allow our customers to cancel. We had to work with our partners to create more flexible options to allow those cancellations to occur. And I'm really proud of how basically the company came together to really solve these really complex problems. Now, at one point, we could actually see the call volumes drop by over 1 million calls and going into the call center. So it really changed the way you had to react to the market. To be adaptable, and we know that some of these changes that we've been able to do during this event will put us in a much better position in terms of our technology, as we basically come out of the event as well.
And both of you, Harriet, David, have used the key word here, innovation. And while we show to the audience what the results are of the polls and how much people think that this seismic change, this opportunity for digital might or might not remain, we're going to see, yeah, there we have it. Yes, 63% do indeed agree that the change we've seen is indeed going to be permanent and at this scale, and notably not a single person, well, two people, but it's coming up as 0%. Two people think that no, we won't see this sort of change in terms of digital focus remain. And 35%, so 79 people out there currently thinking that maybe they're sitting on the fence. So thank you very much indeed that maybe the growth will remain, but not in its entirety. Great to have so many people voting in while they listen to us. Your perspective, Harriet, is you mentioned the keyword innovation, the keyword in which you adapted your product for the here and now and the pandemic that continues. How much do you find that data, the payments data, feeds into your product innovation? Can you give us some more anecdotal evidence of how you've used the data that you see in within payments to better suit the customer base you have?
Sure. I'd say that actually the analytics behind our customers' behavior drives our product innovation across many facets. I can give some examples from the COVID time, for example, the connected card, or some innovation that we made around check imaging so that customers could take images of checks and upload them to their bank account without having to go to the post office or the letterbox to post it to Starling. We got these products out to market because we knew that these were vital payment streams for people and they couldn't be without them throughout this time. But even outside of the COVID time, we use it to really strategize on where we need to go next. So for our SME proposition, for example, we've been able to identify that customers want to be more attuned with their bookkeeping, with their accounting. We've brought products to market which allow them to do that in app. And we've done that because we've been able to see that customers are spending money on these tools elsewhere, and we want to give customers this functionality in app. So I think that for us, actually getting to the nitty-gritty and understanding how customers are really using our product, interacting with our product, and how we can then enhance it further is core to everything we do.
Making accounting sexy, Harriet, I love it. David, your perspective in terms of the innovation that you see within Expedia, you've really put payments at the heart of a business. Your business is huge, international, and not only focused on payments, but how did you really bring this up to board level, to the CEO's point of view? To me, that if you integrate payments at the very heart of what you do, you will ensure that you have people coming back. It can be an area in which you win on versus the competition.
Yeah, and you're hitting right on that core concept of really explaining that if you're really good at payments and you really put that effort to being the best you can be at it, it can be a game changer. It can be a differentiator. It can be a competitive advantage. It increases customer satisfaction. It increases customer conversion. And that leads to obviously better profit margins, and that's good and better revenue for the company. And for Expedia Group, payments and fraud is an area that we definitely said we want to be the best in industry when it comes to processing payments and fraud management. And that's a good thing for our company. It means more choices for our customers. And ultimately, when we look at our goal is we want to make basically the experience innovative, basically easy, and for customers to come in to transact, and for our partners as well, so that nobody would even think about going somewhere else to actually transact, and that removing that friction from the experience. The more payment data that we have, the better that we are at it, the less friction we have to put in place to actually process the transaction. So it means just better experiences overall for our consumers as well as our partners.
David, your global perspective here, because I'm sure that some people based in the UK wanting to come and eventually visit the United States once again would be using perhaps a Starling Bank card to do that. Maybe there's different ways in which the payments process happens in the UK for a customer, whereas a French customer might be different. A German one, I know that German payments are all sorts of exciting because I used to be based in Berlin, and there's no end to some of the nuances in that country. But then there's Asia as well. What have you learned in terms of being a global business and how payments is done in different areas of the world and what it means for you?
Yeah, and it comes down to flexibility and options. One size fits all is definitely not the right answer when you go to the market. So for one part of the world, we want to make sure that we support something like installment payments for Brazil, because that is a preference that they have. Or in Germany, as you mentioned, we want to make sure that we support things like SOFORT and as well as direct debit and PayPal and other forms of payments that they prefer. And the idea is when we transact, we want to make sure that the customer is able to transact with a payment option that they choose, and that is something that they recognize and want to use, and is in the currency that they're coming to the company with. And that makes a big difference in the experience, and that reduces, again, the amount of friction that they have to go through to actually complete that transaction. And it's essential. And likewise, when you go into Asia, for China, you have other alternative payments like Alipay, as well as direct debit that are very popular. So for Expedia Group, part of our success in being really good at payments is ensuring that we actually have these local payments that allow these different, that transacting in these different markets to go, be something that the consumers are really looking to use when they transact versus just credit cards.
And Harriet, one of the key shocks and differences I found in terms of culture was, the lack of challenger banks here in the United States, that you are still very much dependent on the big banks that on the high street, and indeed they do a very good job at some of the app focused parts of the business, and certainly it's very succinct and easy to use. But in the UK, for whatever reason that you can hopefully spell out for us, the very digital focus of the country has allowed challenger banks such as yours really rise to prominence. Can you tell us what the UK is getting so right to allow the ecosystem to thrive and Starling Bank to do so well?
Absolutely. I think that you're right. The UK has really prospered in this way. I think that we've seen such innovation across all aspects of the financial ecosystem. We've got digital banks, we've got payment providers, we've got spin-off third-party providers that are integrating via open banking. And I think that the whole ecosystem is pushing forward day by day at a pace that is remarkable. I think that compared to the US, I think we've benefited from a lot of higher level support. I think we've got some great initiatives like UK Finance pushing forward on the innovation. I think that we've got some real pioneers, and I may mention Anne Bowden. She's been a pioneer from the start, founder and CEO of Starling Bank, really knocking on the doors of everybody, saying, look, we can make this better for everybody. It's not just an app and a shiny front on a back end that's the same as it always was. It needs to be a change from the inside out. And that's what I think UK fintech has got so right. They've really set about rebuilding the process, redefining the product, and making sure that we're on the front foot for customers when we think about product innovation, using technology as it now is, and the benefits that we can get from it. I think open banking has also been quite a key part of this. I think that spinning off the PSD2 from Europe, open banking in the UK, I think that Starling Bank and others have really benefited from integrations with marketplace partners, for example, which allow customers to use more than just a bank account with Starling. They can integrate with third-party providers across investment platforms, other accounting tools, pension platforms. They can link to anything and make it much more of a customizable process, so that actually it's not just a bank account, it's a whole financial ecosystem at your fingertips that you yourself have customized.
David, is there any part of the world where you really think they've nailed it in terms of the payments ecosystem? I'm sure you'll say shout out to Starling and to the UK, but from what Expedia sees, is there anywhere that's really helped allow your product to thrive and payments to be as seamless as you'd like to see them?
I think it's still a moving target to actually say there's any one region that's better than another. It's something that as our consumers basically change, their demands in terms of what they're looking for, it also changes what we need to do as a company. So I wouldn't say that there's a particular area where that it's just best. It's about making sure that we can meet their needs and their expectations in terms of what types of options they would like to have to actually to transact.
Interesting. I've got a question from the audience already flowing in, and thank you. Please do indeed, anyone with an idea or a view or something they want to delve into a little bit more, do put it out there for us to dissect. And maybe I can target this at you, Harriet. Are you seeing that how we manage payment products are they able to fight against financial exclusion in particular? Are you seeing that you're able to service the unbanked in the UK?
So I think that the unbanked population, is a problem, and there needs to be targeted efforts to try to bring everyone on board so that we can reach true financial inclusion. In terms of digital financial products, I think that works towards financial inclusion, but it's not going to solve the whole problem on its own. Starling, for example, works to build products that helps people manage their money better by simplifying the process, allowing people to have everything they need at their fingertips, allowing fee-free banking so that everybody can access everything regardless of cost. But there are still some prerequisites. For example, you need a phone, you need an internet connection, you need to be online to be able to use Starling Bank. And we can't solve that problem on our own. So I think that whilst digital financial products help in terms of accessibility and more inclusion with simpler, more sophisticated products, I don't think it's going to solve the wider problem without some buy-in from wider sectors of the industry and government's policy.
Really well put. Very thoughtful surrounding the whole implication of the unbanked. I'm interested, Dave, we've got another audience question coming from, you mentioned it, how in Brazil there's an element of paying in installments. And so I'm interested in your perspective from a question from Jose, who's asking, in your opinion, the move to buy now, pay later in e-commerce, is that something that you're seeing want to be pushed towards more in Expedia? Is it something that you already see work well in certain parts of the world?
Yeah, I think it's only natural. I mean, when you think about travels, and you're setting up your vacation, this could be a very expensive proposition. So it is something that, being able to have flexibility in terms of how you pay for it, and knowing that you're going to set this up well in advance in terms of when you're going to go on your trip is just a natural evolution. And it's something that there's a good place for this in terms of the ecosystem to actually say, hey, I'm going to plan for my next vacation. I am going to go make this purchase. I'm going to pay for it in installment payments, and then I can go, basically have this wonderful experience and go to new places in the world.
Great perspective. We hope that answers you, Jose. Let's do another bit of interaction with the audience and get another polling question out there, because we've already referenced it very early on in the conversation. David, you raised about really wanting to be best in class when it comes to security as well and anti-fraud. And I therefore want to ask the audience, are companies getting the balance right as it stands in the push for innovation versus the push for user security? So we really want to understand if you think, yes, A, innovation is there, but security remains a priority as it should do. No, security is being left behind from your perspective. Or no, innovation is too slow due to security concerns. So we'll let you think about that, let you put your perspective forward, and we'll see what the audience thinks. But let's get back to you, Harriet, and your perspective in terms of compliance, security. How have you had to square the circle of balancing the push and drive for innovation, particularly in the moments where we see now of COVID, wanting to respond to what people need, when also ensuring that data is being put at the heart of security?
Yeah, so this isn't a new problem for Starling. We've been around now for quite a few years, and we were one of just a few digital banks at the beginning. Now, as we talked about, there's lots of people in this space. But at the beginning, people were a bit curious. People were a bit questioning, what is this technology? What is Starling offering? What is digital banking? And the only way that we could overcome those questions around trust and understanding was to be really transparent with customers. And I think that more and more this is the way we need to go here. I think that the population in general is becoming so much more data literate. They understand that this is my data, and what are you using it for? Why do you need that data, not this data? So I think that transparency and explaining to customers, we're going to use this data to make these decisions or to make this product to benefit you. And that journey is something that companies like Starling and others need to get better at explaining to the customer base to make sure that everyone's on board with the journey that we're all going on.
David, your perspective, as you mentioned, you really wanted to be front and center when it comes to anti-fraud, ahead of the curve when it comes to security. How have you managed to get the balance right from your perspective?
Yeah, well, first of all, I mean, it's the most important balancing act you can do as a company. And for Expedia Group, this is something we take obviously super seriously. We really want to be ahead of this curve. You can see in the industry that there is increasing pressure in terms of new regulation when it comes to data privacy and as well as security, and it's something that it's not going to be. There's no silver bullet that's going to solve this problem. And in the 20 years that I've been in e-commerce, it's been a constant, struggle and battle to make sure that we have the controls in place to protect our customers, as well as to protect the money that's coming in and flowing out. And to be successful in the e-commerce space, you really need to be paying attention to this, and you need to be good at it. And you're going to have to use data that you get from your customers to ensure that obviously they can transact safely and securely. And then you need to make sure that you're a good, you're taking care of that data and managing it in a way that meets their needs. Otherwise, they're not going to come back. So it's super, super important. And if you're not good at it, again, it can also impact your bottom line, because then it could actually change the way that you have to interact with your customers. And the more information I know and about a customer and the trust I have, then I can identify and authenticate. And it's the less information I need to pull from them, and I can actually get right to their needs and actually transact and get them basically through that to where they want to be, and to book their travel, their next trip, which is really the objective.
We have the results of the poll in, and interestingly, only half of those who responded think that innovation is there, but security remains a priority. A third think security is being left behind at the moment, and then 15% say it's slowing the innovative process at the moment. Do you think, Harriet, in any way, it's obviously been talk of the town when it comes to Germany and the likes, but Wirecard and the issues that all raises around fintech, how have you seen that raise once again the concerns when it comes to digital-only products, or indeed fintech as it stands?
Sure. I mean, Wirecard was very concerning for the whole industry, and the way that Starling sees it is that any failure of any fintech is a failure for all of us, because we're all sharing in that, and the fintech industry as a whole is at a disadvantage when things like this happen. I think this is where kind of regulation and policy have a place, and I think that perhaps while sometimes regulation can be seen as stifling innovation, I think in many ways it can just provide the framework in which innovation can flourish. And perhaps here we just need to see some more aspects of regulation around innovation in technology and data usage in particular. I work in the data science space, so there's quite a lot in terms of regulation that I don't think is quite set when it comes to AI methods, for example, that I think we could do with some movement forwards on. And I think that would give companies and consumers the confidence we need to make sure that innovation here has got security and compliance at the forefront of it.
It's interesting because the UK has really tried to lead the charge in terms of having the discourse about AI and the way that folds into the fintech and indeed technology space in general, and some of the ethics that surround that. Have you found that the UK government continues to be receiving of that sort of information and want to be ahead of the curve rather than behind?
Absolutely. There's some great initiatives going on, and there's been some wonderful research being done between the likes of the FCA and the Turing. So there's lots of research going on, but what there isn't quite yet is a real framework for everyone to work towards, benchmarks for everyone to be aware of where everyone else is in the industry. And I think that perhaps that's where some ambiguity starts to appear from the customer perspective and from companies around what we should be doing. Is this the right way to be doing this? So I think that this is really the role of regulation, to give people a safe space to play, a safe space to innovate, and know that it's safe to do so as long as you're within these, outer confines.
And David, in terms of how you interact with the Harriets of this world, with the banks of this world, what's interesting is that perhaps you've had to second guess some of the security measures that banks have in place to ensure that that doesn't in any way add to the friction of a sales process for Expedia. How have you managed to ensure that you don't trigger any fraud alerts or issues with different payments and different types of currency that might usually perhaps send me the alert from whatever bank I have saying, sorry, that transaction hasn't gone through right now?
Yeah, and it's a great question. And I think the first thing I would say is that, when you talk about banks and merchants, people may not realize that they're really they see a different perspective of actually what's actually happening, and they have different data that's available to them. Where a bank may really understand the person and their account from an issuing perspective and their patterns. As a merchant, we really understand travel and how and why people travel, how they purchase travel and what patterns we would expect. And we have different data that we see when they're transacting. And as we work today, we know there are ways to as we transact and create relationships with different banks, that we can ensure that transactions look that they're coming in locally, so that they're expected, so they're processed normally, which can increase conversion rates. But we also work with our bank and network, payment service provider networks to actually understand, what data can we, help provide that can allow them to make better decisions in terms of what we can see in a transaction, and vice versa. And this is something that I think as time progresses, that you're going to have to see these things get closer and closer. And as you talked about AI and data sciences and where that's going in the future, there's real value in terms of security, raising the security bar and increasing customer, satisfaction and experience, reducing that friction by working closer together and getting some of that data combined together to get a more holistic view of our customers.
Yeah, really well put and interesting about the holistic view about customers. And I want to go back to that holistic view, Harriet. We've only got about 3 minutes left, but I want to really keep it on the audience questions right now, because they are responding to what you guys are saying. And I'm interested by ones, you must have such a fascinating perspective of seeing how spending is starting to ramp up or not, as the case may be, post the closure of the UK and the tentative reopening of the economy. How are you seeing that going in terms of the shift that you've seen in the durability of that shift?
Yeah, it's actually been really fascinating. I mean, to watch the changes that we saw almost overnight at the beginning of lockdown. Obviously, they weren't in the positive direction. We saw lots of industries, particularly the travel industry, drop down to almost nothing. But then it's also been fascinating to watch how spending has been building back up, and in some case peaking as a result of government announcements around certain parts of the sectors opening up. So for sure, we're starting to see much more in terms of travel spending. I think people are now starting to think about those summer holidays. I think that we're starting to see much more in terms of eating out, and I think that in the UK, that's really good to see, because we know that people in those sectors have been really impacted by the COVID pandemic lockdown. So I think that we're starting to see signs of normality coming back, but we're still seeing really high proportion of online payments to in-person payments, and I think that this is perhaps representative of people's real feeling around nervousness going back to true normal. I think that everyone is a little bit nervous about this, and so I think that we're likely to see some of these strains of behaviours remaining through time, especially around online payments and contactless payments.
And David, to that point, how are you seeing the different parts of the world respond at different points? It must be a mosaic of what Expedia is seeing in terms of demand.
Yeah, I mean, in general, when we look at like for the UK, I mean, I looked at some of the data, and they talked about obviously travelers are looking local, domestically, to go someplace that they can drive to or they can get out, but they are looking, right, and they are coming to the site. So you can see activities where people are doing what we call dreaming. And they're actually conducting kind of open-ended travel searches to go see kind of what's out there, and with no real dates in mind. And then you can see that there are some that are actually going ahead and planning out some travel out in the future. And it's still a very obviously dynamic landscape, and there's still a lot of we're paying attention to regulatory changes and basically restrictions, I guess would be the better term, that are happening around the world that would impact that. But you can kind of see areas kind of start to come back and people looking at travel. But I think the biggest trend is the go local, go domestic.
I think on that note, we should leave it at dreaming. What a wonderful conversation with both of you. I want to thank so much to David Montague of Expedia, of course, Harriet Roes of Starling Bank. It's been such a joy to be able to spend some time with you, virtually as it might be, but we've run out of time. I want to continue this conversation on social media. If you want to get on Twitter, on LinkedIn, on Facebook with @Bloomberg Live and search for our hashtag the future of, and to learn more about our upcoming events as well, please just go to our website. It's bloomberglive.com. We want to really thank our speakers. We want to have a huge shout out, of course, to our sponsor, checkout.com. They helped us really put on this virtual event and make it happen and possible. And thank you to the audience, because you asked some really great questions. You kept them coming and you entertained me by partaking in some of the audience polls. So really appreciate it. And we look forward to seeing you at our next event. In the meantime, do keep well, keep safe, and we look forward to seeing you at the next Bloomberg Live event. Thanks.